Okay, things just got weird. Apparently, ever since May, North Korea has been floating balloons of garbage, literal garbage, into South Korea and letting it fall everywhere. And as of Friday, South Korea flew drones over the capital of North Korea, Pyongyang, and dropped these leaflets of anti-North Korean propaganda. Listen to this. South Korea's Joint Chief of Staff said it could not confirm the North's accusations, but also referred in its statement to Pyongyang's practice of sending into South Korean airspace balloons with bags of trash attached. Literal garbage. It cited despicable, low-grade, and internationally embarrassing acts of filth and garbage balloons and other provocations. More balloons were being sent on Friday, they said. But North Korea is not happy about these drones. North Korea's foreign ministry said the drones were flown over Pyongyang at night this week and last, and that the intrusion demanded retaliatory action. Now, this was said on October 12th, yesterday, at about 4 o'clock in the morning. And today, we're waking up with some pretty scary headlines. North Korea warns of heavy consequences over drone flights. North Korea's artillery corps near the South Korean border are on high alert with orders to prepare for action following accusations of South Korea flying drones over Pyongyang. Kim Yo-jong, the powerful sister of leader Kim Jong-un, warned that North Korea could retaliate with a strong corresponding action, claiming the attack could come at any time. South Korea denied launching drones, but warned that any attack would mark the end of the Kim regime. A lot of these headlines are hitting the newswire today about 2 hours ago that North Korea orders units to get fully ready to open fire. I mean, talk about going from 0 to 10 real quick. So not only do we have these problems in the Middle East, we now have these problems in the Asia region. I want to say I don't think this will go anywhere because North Korea would obviously screw themselves if they did something like that. South Korea would win, but it's still like not good for markets. I mean, why can't everyone just relax? I know that's obviously a stupid statement because, I mean, North and South Korea are still at war technically since 1953. There was never a actual treaty signed, but let's just hope this does not go anywhere because you have a problem in the Middle East that can lead to an oil spike. And if North and South Korea theoretically went back to war, we do a lot of business with South Korea. There's a lot of, Korean companies based in South Korea that we do a lot of trade with. And there's a lot of trade that flows through that region. Not to mention North Korea butts up to China, and China probably would not be too happy if there was a conflict right on their border. And presumably America would get involved as well. That could be an active boots on the ground kind of conflict, not something we would want to see. So let's hope calm heads prevail in this one. In other news today, the Pentagon deploys a military personnel to Israel, which what they're really mentioning is a THAAD battery to boost Israel's air defense system. One of those, systems that can shoot down missiles and the like. Now, the last time the S&P 500 achieved an all-time high in the month of October during an election year was 1980. Wouldn't you know it, during monthly op/X week, it peaked and found a pullback from there and into the election. So don't be surprised if we do see some downside momentum bias in markets heading into the election. JP Morgan's CEO warns that worsening geopolitical conditions could have far-reaching effects on human history. And it's being reported troubled retailers face a Halloween crunch with consumers spending less, according to Bloomberg. Holiday spending is forecasted to drop by 5% this year. This is as Chapter 11 filings reach the highest level in more than a decade. Now, really, the big story of this week, as long as these geopolitical tensions do not spiral into larger conflicts, now in Korea, now in Israel, as long as there's no problem with energy markets in Israel, then I think you're really going to see the focus turn to earnings. Now, tomorrow, you're really not going to get much of anything. I do also have to mention that bond markets will be closed. So I don't know how much we're actually going to get on Monday. That could lead to more volatility. That could lead to less volatility. I think it really will be about the geopolitical, tensions on Monday, which could send markets lower. But then on Tuesday, it's back to earnings as long as nothing spirals from there. Tuesday, pre-market, you have Walgreens, Boots Alliance, United Health Group, Citi, Bank of America, Johnson & Johnson, Progressive, Charles Schwab, Goldman Sachs, PNC, and State Street. High flyers that report Tuesday morning. Tuesday and after hours, you have United, Interactive Brokers, JB Hunt, Pinnacle, and some others. Wednesday, pre-market, you have ASML. That is one of your AI stocks. They're actually the company that helps supply TSM with machines they need to produce semiconductors. So that one will be important. They've had some really bad earnings as of recently. So we'll see if that can affect NVIDIA and some of the other guys. Morgan Stanley, Abbott, US Bank Corp, Citizens, Synchrony, First Community Bank Corporation, Prologix, and others. Wednesday after hours, Alcoa, Kinder Morgan, PPG, CSX, Steel Dynamics, Discover, and Equifax. Thursday, pre-market, TSMC. That's probably going to be the most important earnings of this week because of their direct kind of correlation to NVIDIA. Now, we think things are good. We did have some not so great export numbers out of Taiwan. That was for September. But you did see Jensen Huang say demand was basically unlimited for NVIDIA products. So that is what caused the rally in NVIDIA that's now setting up high expectations. But nonetheless, you have Huntington, Allegiance Health, the Blackstone Group, M&T Bank, and a couple other smaller banks. Thursday and after hours, you have Netflix, Intuitive Surgical, WD-40, Crown, Western Alliance Bank Corporation, and more banks. More banks as well. Martin, that also reports. Friday in pre-market, Comerica, SLB, and American Express, as well as Ally Bank, and they've recently had their fair share of problems. Another big reason why this week's earnings, and really over the next couple of weeks' earnings, will be important is because, as you can see here, 2024 estimates in blue and 2025 estimates in yellow have really been coming down over the past month or so. At the same time, markets continue to go higher. So stocks have actually been getting much more expensive in the past month because these earnings estimates are falling. Now, whether or not these will rise or continue to fall really comes down to this earnings season, some of the guidance that we get. But every single day almost, you're getting these estimates that are on aggregate falling. Now, what tends to lead markets higher is earnings estimates moving higher. What tends to move markets lower is earnings estimates moving lower. Like you can see this snowball, rolling down a cliff action that we've seen in 2022 via earnings estimates caused markets to fall a lot. Yes, there were certain blips where earnings estimates rose a little bit, but generally speaking, when earnings estimates fall in this fashion, you tend to get a lot of weakness in markets. Well, you've started to see that fall, and you haven't seen any weakness in markets yet. And that could turn out to be a bit of a problem over the next couple of weeks. Also, keep in mind, October tends to be seasonally weak during election years, and the 2 weeks before an election tends to be the weakest period, so we're butting right up to that here pretty soon. Also worth mentioning that we are still in peak blackout period for company buybacks. As a percent of the market cap of the S&P, you have about 80% of the S&P for this upcoming week unable to buy back their stock, which could just leave the markets a little bit more vulnerable because you've been seeing about 0.5% of market cap worth of buybacks a year. So that is a considerable amount of the overall market buying pressure being some of these corporate buybacks. And now that you're in this blackout period, it just provides a little bit less support for markets, especially if we do get some downside momentum. ZionX says, forget the dip. This is the beginning of a total market meltdown. Expect stocks to be crushed and home prices to collapse 30 to 40%. And even though I'm a bear, this is pretty damn extreme. I don't think anything like that is coming. I just think the balance of risk is higher than what the markets perceive. In other words, I think if earnings continue to come in weak, these geopolitical tensions, election risk, economic risk, I think the risk is higher than what the markets are projecting it is. And I don't think the markets are accurately pricing in this risk, and it's not being reflected in markets. As these risks start to actually materialize, there is the greater risk that markets could fall significantly. The larger the disconnect becomes, the larger the fall could be. Earnings estimates falling, stocks rising, that is a disconnect. Okay, geopolitical tensions getting worse. If markets rise on Monday, that's a disconnect. We have a bit of a problem in some of these areas. Now, with that said, the sentiment on the SPY is bearish today at 43. Yesterday, it was bullish at 69. Message volume today is normal at 53, and participation ratio is normal at 53 as well. As far as economic data this week, we're really not going to get much for Monday. You have Fed Kashkari and Fed Waller that speak. Fed Kashkari at 9 a.m., Fed Waller at 3 p.m. tomorrow. On Tuesday, you have some inflation data out of Canada, consumer inflation expectations for the US. You have the Red Book. You have the NOPA Crush Report. You have Fed Kugler that speaks. None of this is really big data. You have Fed Daily that speaks at about 11:30. You do get New York Empire State Manufacturing Index. We're actually expecting this will fall from 11.5 down to 4. Which, again, manufacturing just has not been in a good place for like 2 years now, so that's not going to be such a huge shocker. On Wednesday, you have export prices and import prices month over month and year over year, and this will move the estimates for GDP. Now, current GDP for Q3 is estimated at 3.2%, but again, depending on export-import numbers, you will move the needle for GDP expectations. So that's really it for Wednesday. On Thursday, you have retail sales month over month. Now, retail sales month over month last month came in at 0.1%. We're expecting 0.3% positive. This could be a problem. Some of the data that we have gotten recently suggest that retail sales or consumer spending in general actually fell about 0.5% from last month. So I think it's going to be hard to get a positive 0.3% number with some of the early data that we're getting suggesting we're not even going to be close to that. We could actually be negative. And I expect these estimates will probably fall into Thursday anyways. So I doubt we're going to head into Thursday with that high of an expectation. But if we do, that's going to be a larger problem. As well as that, on Thursday, you have the ECB interest rate decision. They are expected to cut rates by about 25 basis points. So we will see if that has an effect on our markets. It could, but I doubt it. Initial jobless claims could be one of the biggest stories for this week, which is weird. The estimates are all over the place. Last week, you came in at 258,000. The consensus is 241,000, but the forecast is 269,000, which last week's initial jobless claims was the highest we've seen in a year. So if we go higher after that, then I think markets would really start to freak out a bit. Now, beyond that, you have Philadelphia Fed Manufacturing Index, retail sales excluding autos, and continuing jobless claims. You also get Philly Fed Business Conditions, Philly Fed Capex Index, employment, new orders, and prices paid for the Philly Fed region. You have the NAHB Housing Market Index. You have some oil, natural gas stats there, manufacturing production month over month and year over year, and capacity utilization. So a lot of data that comes out on Thursday. The Fed balance sheet comes out, overall net capital flows, foreign bond investments, net long-term TIC flows. the inflation rate out of Japan, GDP growth rate out of China, industrial production and retail sales out of China. All of this comes on Thursday. The data from Japan, the data from China will come out after markets are closed. Japan is at 7:30 and China is around 10 p.m. on Thursday. So yeah, Thursday and Friday, those are going to be the big days for markets. Now, Friday, you do get retail sales month over month coming out of the UK. And building permits, preliminary numbers for September that come out at 8:30 in the morning. And then Friday is really going to be dominated by Fed speakers, Fed Bostic, Fed Kashkari, Fed Waller, Fed Bostic again will speak throughout the morning on Friday. You also have housing starts and housing starts month over month. You really want to see this accelerate. You want to see indications that the labor market the housing market is starting to pick up. If that starts to pick up, that is one area that we could see a surprise to, economic activity in 2024 throughout the rest of this year and 2025. Now, as I explained in the last video, Monday is Columbus Day. Banks will not be open, bond markets will not be open, but stock markets will be open. So lately, there's been 10-year treasury. Take the bond market being closed. It could be a slow day for markets, or it could be a day where equities potentially catch down to some of the rise in bonds that we have seen recently, some of the rise in geopolitical tensions, and getting ready for earnings season at large. So I wouldn't be surprised if tomorrow is a bit of a nothing day, or I wouldn't be surprised if tomorrow is a big down day. I'm not expecting markets will have a big green day on Monday, but I could be wrong. We did hit a new all-time high on Monday and then came down almost 0.2% in after hours. This is, again, exactly what happened in 2007. We've seen a lot of weird similarities to 2007 in regards to hitting the same all-time high in the summertime, having a 50 basis point rate cut on the same date, September 18th in 2007 and today. And now, 2007's all-time high was October 11th. And that was Friday. And we hit a new all-time high. So if we do start to fall or whatnot, then the recent coincidences in 2024 compared to 2007 may actually be a little bit more than just coincidences. So we'll see. Preferably, you would want to see markets hit a new all-time high on Monday to kind of break this weird coincidence pattern that we've seen since 2007. Ladies and gentlemen, that's really going to do it for this video. There's not too much else to say. Watch geopolitical tensions. Again, bond markets are closed. The main focus is around earnings. And unfortunately, earnings estimates are falling. Stocks are going higher. That is not setting us up in a good way heading into the election, which is going to become maybe a larger issue for markets. We'll see. I think we'll get some indications of that this upcoming week. Nonetheless, ladies and gentlemen, you guys have a great rest of your day. Stay safe out there, and I will see you in the next one.